Hey there, tech aficionados. Welcome to the Thursday edition of Tech Stocks Daily. We've got a jam-packed lineup that you won't want to miss. Today, we're diving into Fortinet's sizzling earnings report that's sending stock prices on a joyful upward ride. Then Cloudflare's dazzling Wall Street victory dance. How did they manage to outsmart those savvy analysts yet again? Next, Oracle's strutting its AI stuff and cozying up with Elon Musk's Starlink. Innovation, anyone? And finally, let's venture into Roblox, where we'll unpack why their recent stock dip has made investors a bit jumpy. Stick around for all the juicy details. All right, tech aficionados, let's dive into a hefty serving of cyber sizzle, featuring everyone's favorite digital watchdog, Fortinet. It's been a whirlwind day packed with earnings, tech trends, and those juicy new product launches everybody's been buzzing about. First off, let's talk dollars and cents. Fortinet has really brought the thunder with their fourth quarter earnings. They've reported a revenue of $1.66 billion, outpacing analyst estimates of $1.59 billion. Even more exciting is their adjusted earnings per share, which came in at 74 cents, soundly beating the predicted 61 cents. That's a substantial uptick, and investors are definitely feeling the vibes, as Fortinet's shares climbed 12.68% after hours. Pour yourself a coffee, because with revenue up by 17% year over year and a significant rise in both product and service revenues, this cybersecurity mammoth isn't just coasting on its newfound gains. It's speeding ahead like a top-tier firewall protecting an enterprise network. Why the sudden interest, you ask? Well, their fresh strategy of digging deep into the unified secure access service edge and security operations markets is hitting the sweet spot right now. Cybersecurity isn't just about reactive defense anymore, but proactively building strongholds, and Fortinet is zealously leading the pack by prioritizing all-in-one security approaches. But wait, there's more, and it's a snazzy glimpse into the future. Fortinet's just rolled out the new FortiGate G series of next-gen firewalls, aka the FortiGate 70G, 50G, and 30G models. For the uninitiated, these are the cool, swathed bodyguards you'd want watching over your digital archives. They come powered with Fortinet's own ASIC technology and FortiOS operating system, juggling hefty security measures with performance-packed punch. It's like having a digital ninja that's not just ready to fend off incoming attacks, but is always 2 steps ahead, courtesy of top-tier AI-powered security services. Can you hear that? That's the sound of CTOs across the globe subtly nodding in approval. Adding a twist of sustainability to their ambition, Fortinet claims these high-performance firewalls also dial down operational costs and environmental impacts. Score one for Mother Earth. Last but not least, Fortinet's cybersecurity manifesto is based on converging network and security into one seamless operation. They're pressing hard on their mission of making the digital world safer for sprawling enterprises grappling with sophisticated cyber threats. Secure access service edge solutions, FortiAI, and an overarching security management system beef up their arsenal, making them formidable and eco-friendly. In essence, Fortinet is a fine blend of thrilling financial kinetics and resolute tech innovation geared up to redefine digital guardianship. With 500,000 clients worldwide already trusting their robust solutions, all eyes are on how far Fortinet will push the envelope with its synchronized, fortified future. Time to grab some popcorn and watch this riveting cybersecurity saga unfold. Hey tech enthusiasts, let's crack open today's tech news with a headline that's got investors buzzing. Cloudflare, the internet security and performance company, is stealing the spotlight with its fourth quarter financial results. Drum roll, please, because Cloudflare just reported some numbers that got everyone excited, and here's why they're grabbing the headlines. First up, Cloudflare exceeded Wall Street's expectations, rolling in with earnings of 19 cents per share, sneaking past the sleuthworthy analyst estimate of 18 cents. Their quarterly revenue also swooped in above predictions at a hefty $459.9 million, beating out the consensus estimate of $452.09 million. Compared to last year's same period marker of $362.47 million, that's quite a leap, reminding us of Mario hopping over Goombas. CEO Matthew Prince is understandably chuffed. He's pointed out the record growth in their biggest customers, specifically those showering Cloudflare with over $1 million annually. In 2024 alone, they added 55 of those deep-pocketed clients, with many signing the dotted line towards the year's tail end. Apparently, AI innovations have become their secret sauce, enabling them to deliver significant returns on investment for clients just faster than you can say ROI. Looking to the future with the swagger of a knight in shiny armor, Cloudflare is forecasting good vibes for the first quarter, with expected earnings of about 16 cents per share, along with an ambitious $469 million in revenue. They're mapping out a route towards their fiscal 2025 treasure chest, which aims between 79 and 80 cents earnings, and a chunky $2.09 billion to $2.94 billion in revenue. Gotta love a company with a plan, right? Skyrocketing stocks also tag along this news as their shares were on the uptick, climbing 7.41% after hours. Someone bring scissors, as they're certainly tearing through analysts' reports. And speaking of analysis, Cloudflare's technical charts turned heads with their bullish momentum. The current $144.29 stock price sails like Magellan above their key moving averages. These figures suggest sustained buying pressure, tantalizing investors with prospects of future skyward trajectories. However, there's a spicy twist in the tale. Despite the positive pressure, the relative strength index huddles at a wary 78.113, which nudges Cloudflare into overbought territory, possibly enticing trigger-happy profit takers to make their move. The stock is in a delicate dance of bullish potential versus the reality of sudden pullbacks, especially if the earnings beat fumbles short of expectations. Analysts, meanwhile, keep singing Cloudflare's praises with a general buy rating, setting ambitious targets for future climbs. So there you go, Cloudflare's financial feats and technical charisma have put them in today's spotlight. Let's see how this cloud-based night charts its course going forward. Got popcorn? Stay tuned for more tech tales and twists. Buckle up, folks, because Oracle is really strutting its stuff in the tech world today, and they're making headlines for a couple of hot reasons. If you're a tech enthusiast or have even a passing interest in business technology, this is going to tickle your fancy. First off, let's dive into the money pool. Oracle is attracting some big-time investor attention with their recent options trading activities. According to analyses from financial tools like Benzinga's Unusual Options Board, the market whales are throwing their chips down with a notably bullish attitude towards Oracle. Approximately 41% of these investors are opening trades with a rosy outlook, and a chunky $2,207,427 worth of call options has been spotted. Wall Street seems to be eyeing Oracle's potential like a cat watches a laser pointer. Now, if the numbers don't get you excited, here's a little bit of tech wizardry, sure to buzz the beehive. Oracle has amped up its Fusion Cloud human capital management system with some snazzy new AI features that remind us we're living in the future. They've rolled out new role-based AI agents, reminiscent of those sci-fi assistants that handle everything so you can spend your time on more meaningful work. This isn't just a minor tweak. It's like they've strapped a jetpack onto their HCM toolset. These AI agents are designed to streamline laborious HR tasks, giving employees and HR leaders the freedom to slam dunk their more strategic, human-centric work visions. Just think, automated onboarding, performance reviews, and perks management without the headache. You can see why HR folks might start referring to Oracle as their new best friend. According to Oracle's executive VP Chris Leone, they're aiming to elevate productivity to unprecedented levels by automating the mundane and focusing on the impactful. Oracle's expanding innovation doesn't stop there. In a spectacular combo move, they've also teamed up with Elon Musk's Starlink to boost connectivity for their enterprise communications platform. Remember when collaborating with rocket companies sounded like a half-baked shoot for the stars? Nope, just a regular Thursday in Oracle's world. Let's not forget the market reaction. Oracle shares have taken a hop, skip, and jump at 1.01% higher, landing them at $173.40 pre-market. It seems that this blend of smart money maneuvers and cutting-edge product innovations is dancing quite comfortably with investor sentiments. In the end, whether you're keen on financial trends or just jazzed by planetary-scale tech advances, Oracle is serving up precisely the kind of multi-course news feast that shows why they've been a powerhouse since 1977. Keep an eye on this one. It's bound to lead to some very interesting developments. Guess what? Roblox is making waves on the market, but not quite in the way they'd hoped. The video game platform stock took an unpleasant dive today, dropping by a whopping 11%. So, what's going on? Let's dive into the details. Roblox recently released its fourth quarter financial results for 2024. On the face of it, things don't look so bad. Revenue came in at a hefty $988 million, up 32% year over year and exceeding what the company had forecasted. Nice, right? Not so fast. While the headline figures got some applause, investors are worried about certain underlying trends that cast a shadow on the bright numbers. Let's break it down. Bookings, essentially the money committed by Roblox users to the platform, didn't quite rock the boat. While they increased by 21% compared to last year, this was only 1% more per daily active user. Now they're saying, where's the growth spurt we were expecting? Turns out, Roblox's user base grew to over 85 million daily active users, a 19% uplift year over year. But you may ask, isn't more users a good thing? Absolutely. However, this growth didn't meet the bombastic expectations hovering over Wall Street. What really sent shivers down investors' spines was Roblox's outlook for 2025. Although they predict bookings to fall between $5.2 billion and $5.3 billion, they're also anticipating a substantial net loss, roughly around $1 billion. And here comes the corker. Despite these losses, they're predicting a juicy free cash flow of $800 million to $860 million. These conflicting signals stirred the pot quite a bit, sending that stock on a downward trajectory. Then there's the timing issue. Investors spotted that first-half growth in 2025 will likely outshine the second half. Does this dial down enthusiasm for the future? Maybe. Plus, first-quarter bookings are expected to miss analyst expectations slightly, which isn't ideal when the crowd's expecting fireworks. Now, amidst this stock market roller coaster, there's a hint of hope. The dip kicked off before Roblox's management had their conference call, suggesting there might be more context yet to enter the scene. Furthermore, Roblox was trading up by more than 30% in 2025 and had nearly doubled over 6 months before this dip, which means investors perhaps anticipated a bit too much. So, what do you think? Is Roblox on a rocky ride or just hitting a temporary bump in the road? I'd love to hear your thoughts. Do you believe in Roblox's long-term potential, or are you spooked by the numbers? Drop a comment down below and share your perspective. All right, tech investors, let's put on our analytical caps and dive into the Fortinet stock story from today's reporting. Given the upbeat news, if I were looking at Fortinet right now with that impressive earnings beat and stock performance, I'd be considering a buy position. Now, before you dive headfirst into the stock market pool, remember to always do your own research. It's your money after all. Why the buy, you ask? Well, Fortinet's not just having a good day. They're on a roll with some serious momentum. We're talking about beating earnings expectations significantly, with adjusted earnings per share coming in at 74 cents, up from the anticipated 61 cents, and a revenue spurt to 1.66 billion against the forecasted 1.59 billion. That kind of financial strength isn't just a flimsy statistic. It often translates to market confidence and investor joy, as seen with their stock popping 12.68% after hours. Fortinet's strategy of beefing up their secure access service edge and security operations games seems to be resonating well with enterprises seeking proactive cybersecurity solutions. And hey, who doesn't like the sound of a digital ninja firewall series? Innovation is clearly on their agenda. Moreover, with a focus on sustainability that not only promotes a positive brand image but also reduces operational costs, they seem to be attracting those eco-friendly investor dollars too. Sure, the ride in stock markets isn't all rainbows, and skepticism sometimes peeks its wary head around bullish news, so it's critical to ponder potential challenges. Fortinet plays in a rapidly evolving space, filled with competitors revving up their engines as well. Keeping up this growth momentum is key. So, with all eyes on Fortinet's synchronicity strategized future and a robust client base already championing their cause, I'm giving them a green light. But hey, don't just take my word for it. Dive into those financials, explore the tech trend echoes, and ponder the broader economic climate before you click that buy button. It's your call, your action, your game. Happy investing. What a whirlwind day in the tech world, right? We've seen Fortinet race ahead with impressive earnings, Cloudflare riding high on investor confidence, Oracle flexing with innovative AI partnerships, and Roblox hitting a bit of a snag. With stocks swinging and financials unfolding like a suspenseful movie plot, there's always a lot to digest. Remember, my fellow tech fans, the markets are like a box of surprises, and every day brings a new chapter. Keep those analytical hats handy, and if you're as fascinated as I am, hit that like button, share the tech vibes with your friends, and subscribe for your daily tech tonic. Don't forget to check back tomorrow for another potpourri of tech twists and market stories. Keep buzzing.